if you have been following the news, you will see that home loan rates have gone up again. What ah? Oh, the what ah is for the bank, because all of them have been doing super well recently. DBS profit surged 32%, OCBC 31%, UOB 34%. But for homeowners, not so much, because now homeowners will end up paying more interest on their home loan. In this video, I'll be discussing everything you need to know. With rising interest rates, how much more interest are you paying now? Which loan package should you go for? Should you pay back your loan earlier? And more importantly, how much higher can the interest rate go? To the moon? As usual, before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I will show you a cute hamster. Alright, let's start right now. While I was expecting mortgage rates to go up, I totally did not expect it to go up that fast. Back then, the highest interest rate was just 3.08%. And now, we are already at 4.5%. Here are the latest home loan packages offered by the three banks. For fixed rate loans, DBS is offering the lowest rate at 4.25% now, while UOB has the highest rate at 4.5%. For floating rate loans, UOB is offering the lowest rate at 3 months SORA plus 0.7% per annum. But see this star? This means that it's a promotional rate. And to get this rate, the minimum loan size needs to be at least $350,000. But if you qualify for this loan, you'll get a free water purifier worth $699. So sign up now. Okay, I will stop before I sound like a bank agent. Meanwhile, DBS has the highest floating rate at 3 months SORA plus 1%. Currently, the 3 months SORA is at 2.76%, which means that we will be paying 3.76% interest on the DBS floating rate loan for today. Besides that, DBS also came out with hybrid loan packages, where you can choose a mix of fixed rate loan and floating rate loan, and that's called diversification. There's one more round of rate hike to go this year, which means that by Christmas, home loan rates could reach as high as 4.5% to 5% interest. But how would that actually affect you? First, your monthly payments would go up. Duh! In the Straits Times article, there's a lady named Miss Chi who owns a 2-bedroom condo. She is still on a fixed rate loan of 1.18% for 2 years, which will only expire in April 2023. She said that she's not too worried about the rising rates. I don't know about Miss Chi, but if I were her, I would be super worried now. Check out this chart by Stat Homes. Let's say if she took out a $500K loan for a 2-bedroom condo and her loan is at 1%. Right now, she's paying around $1,900 per month. When she refinances next year, chances are her rate will go up to 5% or more, which means that she will be paying around $2,900 per month. That's a $1,000 increase in monthly payments, or 12K a year. That's just assuming her loan is just 500K, yeah? If it's those people who bought those $1 million flats, they will be paying even more money. Maybe you'll be like, hey luckily I don't own a house, I'm just renting a house. Then I've got bad news for you, because according to Straits Times, the rental market has gone bananas. Check out this chart by Stat Homes. Just last year, 4-room HDB rentals was just $2,100. Now it's reaching almost $3,000. For every 0.5% increase in home loan rates, your rent will increase by $100 per month. Quick pause, we are now in November, and you know what that means? Even more sign-up bonus from Weibo. Weibo has further increased their sign-up bonus to $150 cash voucher. All you need to do is deposit at least 2,000 SGD into Weibo, buy a US stock or an US ETF with a minimum transaction of at least $100. Then buy one option on the US market while maintaining a 2,000 SGD net account value for that 30 days, and you will receive all your free rewards. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. But how much higher can it go? After all, inflation is already starting to come down, and there are rumors about the Fed pivot. You wait long. Papa Power has already vowed to raise rates until the job is done. By job done, he means that he wants to see the inflation rate go back down to 2%. Meanwhile, we are still at 7.7% inflation rate. So until the Fed is confident that inflation will remain low, they will continue to raise rates. Here's what we can expect to happen. Right now, we are at the 4% federal funds rate. Let's say the Fed raises rate by just 50 basis points in December. That will put us at the 4.5% interest rate. Then in 2023, there will be 8 FOMC meetings. Let's say the Fed raises rates by just 25 basis points. Very small, right? But that will mean we will reach a 6.5% rate by end of next year. If that were to happen, we could see home loan rates reach 5.5% or even 6% by the end of next year. Mr. Chao from 99Co has the same view, where he feels that rates could move above 4 to 5% range by next year. Okay, enough of scaring you. Here's one good news. The rates won't stay high forever. Right now, the federal funds rate is expected to peak by 2024 and will start to come down slowly. Assuming that Putin don't start World War III, of course. If you check the historical rates, you will see that it took a very long time for the Fed to go from 6 to 7% interest all the way down to historical lows. So we will have to get used to high rates in the near future. With that being said, what can you do? First, if you are on the HDB loan, congratulations! Your loan will be fixed at 2.6%. And don't worry, because HDB loan will not increase the rate. That's because HDB loan rate is pegged at 0.1% above CPF OA rate. And CPF OA rate is determined by looking at the bank's fixed deposit rate and savings interest rate. And since all the rates are super low now, CPF OA will not increase. Next, if you are on a bank loan, you have to start paying a higher interest rate now. But should you choose a floating rate or fixed rate loan? Right now, the cheapest fixed rate loan is at 4.25%, while the cheapest floating rate loan is at 3.46%. How to choose? It depends. If you don't like uncertainty, go for the fixed rate loan. Even though you are paying a slightly higher rate now, at least you are sure that your rates are fixed for the next few years. Also, even though DBS has a 5-year fixed rate loan, personally, I wouldn't go for it because everyone is expecting that the federal funds rate to peak within 2 years. So if you got that 5-year loan, you will be gong gong and start at paying 4.25% interest for the next 5 years, while everyone else is paying a lower rate. However, if you believe that the rates will go down soon and you like to live dangerously, go for the floating rate loan. Just take note, right now the 3-month SORA rate is going up fast and furious. Even if the Fed slows down rate hikes, Property Guru Finance Vice President Paul Wee has warned that SORA could reach 4.3% in the next quarter of next year. So you would be paying 5% interest if you're on the floating rate package. There's one more choice. If you are not sure which to choose, DBS Hybrid Package is a balanced approach. The fixed rate part will protect you from rising interest rates, while the floating rate part will help you save money when interest rates go down. Here's a tip. If your monthly income is $2,500 and below, POSB has this HDB home loan package where it gives you a 3 years fixed rate loan of 2.6%. So do get it if you qualify. One more tip, even if your loan contract hasn't ended yet, you can already start shopping around for a new loan, yeah? Don't be like Miss Chi, who only worries about her loan when the lock-in period is up. That's because according to the bank agent, the new rate will only kick in 3 months from the date of submission. Another way to save interest is to use your excess cash to reduce the loan payment. If you want to do this, just make sure that you are still able to achieve your other goals, yeah? Like saving for your retirement or your child's education. You don't want to end up in a situation where you reduce your loan payment but not having enough money for your retirement, yeah? Here's a tip. If you do decide to pay with excess cash, CardUp lets you pay for your mortgage with your credit card and earn some cash back or miles. So in conclusion, home loan rates are going to the moon and there will be short-term pain for 1 to 3 years. But if you have planned your finances properly, as you should, there's nothing much to be worried about. Anyway, that's all for this video. Hopefully, it helps you out. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.